Hello, this is Brian Resney, President of Resney Wealth Management. I'm here to bring you another update this Wednesday about the economy and the investment market, so hopefully you can better understand what we see and what we are currently doing. You know, last week Facebook IPO'd on Friday. IPO stands for Initial Public Offering. It was a huge flop. I don't want to say that I'm glad that it was a huge flop, but it just goes to show that these are the conflicted advice and things that come out of Wall Street. Any broker-dealer, any brokerage firm that sells any kind of product, underwrites product, or sells anything for commission is not acting in a fiduciary capacity. And I always tell clients and potential clients, Wall Street is not your friend. They're working against you and they're working against your money. This IPO of Facebook is a prime example. In fact, Morgan Stanley's now been subpoenaed, supposedly or allegedly, that they gave their institutional clients kind of a pre-warning that they thought their revenues were going to actually slow down. So we'll see how this whole thing plays out. But at the end of the day, Wall Street's not your friend. Any firm that does investment banking, and by the way, all the big broker-dealers do investment banking, any of these firms that underwrite stocks, bonds, mutual funds, variable annuities, that basically garner fees from revenue sharing, commissions, and so on, do not have a legal obligation to work in your best interest, nor does that so-called advisor that works for that firm. And that's why our clients have always obviously chosen to deal with a firm like Resney Wealth Management, which is a fee-only registered investment advisor acting in a fiduciary capacity that obviously follows a strict investment discipline, not only for upside potential, but to reduce risk in severe down markets. Again, Wall Street is not your friend, and their business and what their objectives are far different than the general public. This Facebook only proves this even more, and that's why the advice they often give is tainted at best. So with that, we saw a little bit of sell-off in the first couple weeks of May. Obviously, we don't get nervous, we don't get emotional as a money manager about that, and neither do our clients. At least I believe most of them do not. Of course, nobody likes to see their money go down temporarily, and everybody wants to see it always go up, but you're going to have a month or quarter where things can go down a little bit and then kind of rebound. A lot of it, I think, has to do, generally speaking, with what's going on, obviously, in Greece. Again, Greece is in the limelight. Again, there's more talk now that with the new political party coming in, that Greece may be booted out of the Eurozone and so forth. I think that's possible. I don't think that there's going to be a major problem with that. I think ultimately, finally, it looks like the major parties, obviously France also has a new political leader, and Germany now is kind of in the forefront of, hey, you know what, maybe we need to kind of step it up and really get this our house in order with our banking system, like what the U.S. did back in 2009. I think that's ultimately going to happen, and I think some of the volatility you're seeing is because of that. It's not necessarily because of a weak economy, it's more because this whole Euro crisis has kind of come back in the limelight. It's kind of like things come on, the light goes on, light goes off. It's kind of a back and forth scenario. So again, we're going to continue to run our strict strategy. We're going to implement, obviously, any changes that need to be made on a timely basis for all of our client accounts, and that includes strict risk management. And we're going to follow our investment strategy to a T. If we don't, guess what, folks? We don't have an investment strategy. We need to do what you're paying us to do. And that means not only providing upside potential, but protecting portfolios in severe down markets. We're not talking about 3 or 4 or 5 or 6% moves, but anything where it really gets out of line, where it really triggers us to raise more cash and short-term fixed income in order to protect principal and continue to glide through, hopefully, a much lesser downturn than what a typical recession would be. Now, while I'm not seeing any signs of recession in the near future, we're always obviously on the lookout for any kind of changes in all the investment markets. And again, I go back to one of the scenarios that I've seen just too many times, not with our clients, but with a lot of our radio listeners and some of the questions. I think investors ultimately need to realize that, you know, there are going to be changes within any portfolio that needs to be made. I think buy and hold, which is really what Wall Street has pushed for years, you know, kind of set it and forget it type strategy, obviously hasn't worked. And changes to a portfolio, whether it's to reduce risk, whether it's to be in stronger, relatively stronger investment sectors, is going to be more important than ever. I'm going to talk more about that, obviously, on this radio show this Sunday. Memorial weekend is coming up. I'm expecting a fairly slow Friday, and obviously Monday the markets are officially closed, and so is Resni Wealth Management. But of course, if you are a client, please call us if you have any questions or concerns. And as always, we appreciate your referrals in your business. If you're not a client and you'd like to become a client, as I always tell investors, there is a difference. Experience it. There is a difference between what Resni Wealth Management does and a so-called advisor, commission-based or fee-based or Wall Street. Call our firm. We'd love to talk to you and make sure you have yourself a safe and profitable Memorial weekend.